Take 5. Okay. Low volume zones and volume profiles. Let's make this quick because I don't want to keep you guys waiting. And I'm not going to go over examples because I've done that enough. Volume profiles are really important. They're going to show you where volume is accumulating. You can find imbalances in them. You want to get to a swing high to a swing low. So like you can go from those October in 2022 lows to now. And then these are my settings. Actually, this is at 150 to 250. It really depends on how I'm feeling. On a higher time frame, you can lower them. On a lower time frame, you can higher them, or you can make them higher. Just for example, I'm gonna just do 250. It's right here on the left. 1, 2, 3, 4 down over. It's your fixed range volume profile, okay? Because it's in a certain range. So it is showing you all of the volume where it is within this square, okay? This shit doesn't matter. This shit doesn't matter. This doesn't matter at all, okay? That's what it's showing you. To sum it up, you guys have kind of understood low volume nodes, low volume zones, volume profiles. Hopefully you guys understand them. I don't really want to go over them again, personally, but it's going to change on whatever time frame you're on. So like I really like to look at the 2 hour as well as the 4 hour. Sometimes I'll draw volume profiles within a volume profile like this because it'll show many different things. So like this one would show here to here. So it's kind of showing me that bottom of ES at this low volume zone. I'm not going to get too into it. So low volume zones or low volume nodes are areas where relatively low volume was transacted by market participants compared to the rest of the profile. Does this make sense? Okay, what does this mean? According to the market profile, low volume typically represents directional conviction. Per auction market theory, this imbalance is created when participants decide they are ready to push price outside of the balance. I'm not getting into auction market theory. You guys can fucking dive super deep down the rabbit hole. You don't have to know it, okay? Basically, volume profiles in low volume zones are going to show you where there are imbalances and balances in the market. You can do whatever you want with that information. This is going to kind of show you, do market go up or do market go down or do market go sideways, to dumb it up, okay? The market rotates between compression and expansion, spending most of the time in compression, okay? Compress, expansion, compress, expansion, compress, expansion, compress, expansion, compress, expansion, so forth, okay? This results in an unfair price as participants have not allowed price action to develop in these regions. So, just as high volume nodes or volume profiles, you can call them whatever you want, okay? They create areas where prices slow down. Low volume nodes will create the opposite. So, based on this, this is POC. This is where the most amount of volume is transacted. Price is slowed down, meaning we're chopping. But when we see a low volume zone, we normally see expansion within the market. Okay, low volume zone, massive expansion. Okay, why is that important? Because you're going to trade the bigger moves, not off volume profiles, but off low volume zones. You will catch the biggest moves, the larger moves, because you're getting the expansion. You're finding the imbalance in the market, and you're taking a trade based off of it, and you're going to get a larger result. Whether if you just trade volume profile to another volume profile. Okay? So, if price penetrates significantly into these areas, it transverses through areas with speed. So this is kind of another thing. Sometimes you can see like this is a large low volume profile. It kind of worked as acceleration through the market. So you have to understand that not all low volume nodes, low volume zones are created equally. You have to find and you kind of have to understand which ones are going to give the greater expansion and which ones are going to give the acceleration in price, which is when it, goes through the area with speed. You can kind of imagine them as like an air pocket or an air gap, low gravity areas, whatever you want to call them. And this occurs when there is little to no value established, and it is what translates to the participants having historical reference or biases in the market in terms of what it even means to trade into these areas, or called no man's land. So we can go into different exhibits. Let me go to some examples. So you can see here, okay? We had a low volume zone. We saw big expansion, okay? Let's go to the next bigger low volume zone, which was, I'm just marking out the big ones right here, okay? Big move from a really big low volume zone to another. I'm not really going to count these because these are kind of relatively small where volume is significantly low. The more important low volume zones is where there's high volume around it, above and below, and there's no volume within a significant area. That's where you're going to see your imbalance in the market, if that makes sense. So imbalance, 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 kind of an imbalance. You're really not going to see too much just because it's low volume, low volume, low volume. But right here, high volume, high volume, high volume, high volume, high volume, high volume, and so forth. Okay? So, I don't want to do this. I'm going to read part of a book to explain it. Imagine a low volume area as a balloon. The surface of a balloon offers resistance to probing of the tip of a pencil. Once the pencil pierces the balloon, however, there is nothing to stop its motion in the direction of the initial probe. If a price probe penetrates the extreme of a low volume region, then the subsequent price movement is often swift through the remainder of the low volume area. However, like the balloon, the low volume area gives before it breaks. Price must often trade substantially through the low volume area before it is no longer offers support or resistance. This kind of goes to auction. I'm not even going to get into it. High and low volume areas do not represent mechanical trades. They do, however, provide useful reference points to enable traders to visualize potential future activity. The importance of such reference points lies in the detection of market change. By monitoring the activity of the high and low volume areas, a trader can determine whether or not directional conviction has changed since the area was formed. Through the detection of fundamental change, traders can better manage their risk and identify areas offering favorable trade locations. From Dalton, Mind Over Markets. You can read it if you want to. Okay? That's kind of the simplified version. It might not be that simplified. I will make a slideshow to kind of go over it with examples. It gets really, really confusing. But this is just not something you want to simply take trades off of, but it's kind of showing you what price is going to do. And you can kind of go back to... It works... Okay, I will say this. Volume profiles work best on the higher time frames. Hourly, 2 hour, 4 hour, daily. Okay? It kind of gives a directional bias because as we were just fucking melting through, it was really hard not to long. I have a level here. It's hard not to long, whatever. But then when I see just a, not necessarily random, but this to me, this is a beautiful low volume area. It is a low volume node within a low volume zone. This is so perfect. So when I saw NQ getting down here, I had to take longs. I had to, because as much as I want to call this a low volume area or a low volume zone, it is, but it's there's something about it. It's on the tip of my tongue of how I would explain it, but it's not as satisfying as seeing this, where I see I see either three volume profiles, or three. Oh my god, I'm getting so confused talking about this. Sorry, this is the 5th video I've recorded. When I see three profiles, okay? 1, 2, 3, and I see like one really small in the middle with a good amount of drop off, or I see something like kind of like this, where it is a drop off. Let me go. Like, let's even go into here. If we go from this low to this high, we kind of zoom it in, zoom it in, zoom it in. It's a little bit hard to kind of tell off this because my settings are really fucking high. Jesus Christ. Okay. It's kind of really hard to tell off this just because on the lower time frames, you're looking at price within a non-important area. Like, yes, you can trade off of like volume profiles like this on a small time frame showing like a day or two. It's really hard. And TradingView doesn't allow really good volume profiles like the VRVP. That's not how you spell it. Why I don't like visible range volume profile, because this doesn't really show me much. It's only going to show me what I zoom out to. So like if you compare, I don't even know if it's going to compare. Like, yeah, the POCs are the same. This isn't really the greatest. I guess I could change the row size. But the issue is this is always going to kind of move around. Yeah, I guess it does get that low volume zone. You can use VRVP. I just don't recommend it. I'm not the biggest fan of it personally. I like being able to draw mine, but like, yeah, you could see like this is a low volume zone. This is a low volume zone. But you're not going to catch all of it just because the TradingView one is not super accurate. This is where something like Sierra Charts comes into play because it's a little bit prettier. I mean, yes, like this is relatively the same, but if I zoom out of this, this is only going to show you what's on your screen, where it gets kind of just disgusting. You might like it. I'm not the biggest fan of it personally, but like on CR charts, this is what one of your volume profiles are going to look like. Like you could see these are all just low volume zones all down here that you can kind of take trades off of. So yeah, I guess it would be kind of key to be intraday. Like, I guess you can use this for intraday, but for like drawing them, I prefer to do the hand draw method with the one that TradingView actually provides, just because I think it's a little bit more important. But the more you get into it, the more if you really want to get into auction market theory, you can. I'm trying to find, I had some more information about it, but it's just really to give market direction. Oh, here we go. Okay, let's talk about high volume nodes, or volume profiles. Okay, your high volume nodes are going to be boom, 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 boom. I could keep going all day. Okay, so in shorter time frames, high volume areas represent the market's most recent perception of value and therefore have a tendency to attract price. This is what indicates chop. So all these, yes, these are levels, but think of them as magnets in a sense. These, to me, are like large magnets where price will like to kind of just stick nearby. As you can see, as I'm drawing these, like you can kind of see how price is kind of drawn towards them. Kind of acts like a magnet. So you could play low volume zone to volume profile, or you could play your short to a volume profile, and so forth, vice versa, whatever. Naturally, all markets undergo a change that leave the high volume area in search for a new value. Should the market subsequently return to those price levels in the high volume region and should once again attract slow price, we caution that the market's memory and primarily short term, the longer price remains away from a specific region of acceptance, the less significant of the high volume will have on the market, and therefore rentiers that the region. The less significance of the high volume will have on the market as it re-enters the region. However, with regard to day and swing traders, the area of previously established high volume should slow price movement before long enough to provide sufficient time to enter or exit a trade. So like sometimes if I'm let me go, let's go back, like whatever, like when we are super flat, like you can see, let me turn on regular trading hours. So you can see like a lot of these levels are kind of just price magnets where we are just kind of chopping. Like we can see we are drawn towards this as we can't break down. We're drawn towards this as we can't break down. We're drawn towards these levels as we can't break down or we can't break up and so forth. That is what HVNs, high volume nodes, volume profiles are going to what they're kind of going to do. So using high volume nodes or using volume profiles and low volume nodes are going to provide useful reference points to enable traders to visualize potential future activity. The importance of such reference points lies in the detection of market change. By monitoring activity around high and low volume areas, a trader can determine whether or not directional conviction has changed since the area was formed. So you can use this, you can use volume profiles of kind of where the market's going. Now, yes, you can use EMAs, you can trend lines, whatever. It all works. It's all, what conviction can be added towards the market is what's going to help you the best. So the market rotates between compression and expansion. I've kind of already spoke on that. But high volume regions are going to act as a fair price where participants are allowed to have price action to develop in these regions to indicate that a certain period of time these prices were agreed upon both buyers and sellers as being fair or equal in nature. Okay? High volume concentrations identify potential areas of acceptance by the marketplace. If the price is accepted at a particular level, then the market will probably spend time trading there. Thus, past high volume areas should be viewed as potential support and resistance points that may offer a period of limited risk for trade. For resistance points that may offer for trade entries and exits. Because high and low volume areas have such broad applications to trading, we save their discussions for later. I'm not going to read the rest of that. Okay, so once a high volume node has kind of been determined, you can kind of use them as levels. This kind of just goes back into, I don't want to say having much, but this is kind of like the POC play, where POC bounced here, we went higher. You can use these however you want. Like some people get really into volume profiles. I throw them on. It's nice to kind of put them on my hourly like zones. So like if I was charting like ES or whatever, like I might just put right here. Or sorry, this is NQ. I might put just like a line right here and put this is a low volume zone, and I might type in between here and here on the actual price just to kind of give me a suggestion. Now when price comes down here and I see like the hourly's forming and I draw a zone and that's a support, so when I see NQ coming down here and I'm like, okay, I have an hourly zone, this is some type of resistance, we have a volume profile, because like you can even see here, like we actually bounced off a volume profile earlier today. So I'm not saying they're not crucial, but you kind of have to learn how to use them, and I don't know the best way to explain it other than just experience. You need to throw it on a chart. You need to understand it at least like 3 days a week. Like go draw your volume profiles, because once you draw them, all you have to do is literally just expand them. Like come down here, move it over. That's all you have to do. So get into this, but I guess I will. I know it sounds like I'm reading. I'm reading off a note I have in my Discord because I don't have this shit memorized, and I'm trying to explain it the best I can. We can get into implications. So basically, this is a concentration of high volume regions, and it is a result of the market spending a relatively significant amount of time trading within a range. This gives to a mean reverting environment where both buyers and sellers are active, forming a short-term balance, which price slows down to facilitate trading these areas. So you don't want to, this is fucking deep down the rabbit hole. You don't want to trade market balances. You want to trade the imbalances in the market. I know ICT talks about it and whatever. I don't fucking know what the fuck he says about it, but the market's constantly making imbalances and balances. The worst thing you could do is try to trade a balanced market because you're not going to get the move you want. Especially if you're trading options, you're just going to get screwed over because time's working against you. And unless you're in the money making money, you're kind of screwed. So again, think of high volume nodes as magnets that attract and repel, depending on the direction our price is approaching from. Just for example, if it's approaching from below, it might act as resistance. If it's approaching from above, it might act as support. Price slows down to facilitate trades in these areas, due to these areas being established as areas where fair value has agreed upon past acceptance. So, typically, you can look at momentum and spot activity to determine where the underlying strength of the move is. And you can kind of determine this by whatever the range approaching POC or the highest volume node. So like, as we were approaching POC and we ended up knifing through it, you could have taken a trade off that. I took a trade off of it and I lost. But now we broke through it. We bounced off our low volume zone, which has been super, super crucial. Now we're trying to make this move back up to POC, where I'd assume we kind of chop possibly between a range. As you can see, we're still failing to kind of hold above it, but right now, for this session, and probably going for the rest of the week, I'm not really sure NQ is going to get below this volume profile, which is really big. It might come to this area, to here, personally, or it might come down, I guess you can consider this a low volume zone. So I would say for the next probably week, I think NQ might stay between, where's my drawing tool? These two areas, where we're probably going to see some type of balancing in the market, okay? Just personally. Oh, I need to go over point. Okay, so the point of control, which is this red line, okay? The point of control is a high volume node, but a high volume node does not have to be a point of control. So this is, what I'm saying is like, oh, damn it. This is a high volume node, this is a high volume node. This is the point of control. These are not considered points of control besides this. This is the main point of control. So if you're on bookmaps, you're always going to see point of control. That's going to change. But this point of control is also going to change as well. So if I go back here, point of control is still, actually I think it changed. I think it stayed the same the entire time. So your point of control is probably going to act more of like the biggest magnet in a sense, considering that we're underneath it or we're above it. That's when it's going to kind of start to act like a magnet, especially when we're undering it, or when we're under POC. We're kind of getting a new, we're starting either another imbalance zone or we're bouncing in the market. But for now, these volume profiles like this one and some of these are probably going to act as levels. Same with the ones above. This is going to act towards our magnet, where we're probably going to stay in this 600 point range, more than likely. But there could be multiple high volume nodes within a range, and the node with the highest volume is POC, which is the red one. Let me see, what else can I give you guys to make this video not worth nonsense? God, there's so much that I can go into, but I'm not going to. I know that's a lot of information. It's a fuck ton of information. I will probably put this on paper, just because it is a little confusing to understand it. I might as well go over some examples. But it does get very tricky. The more, like, it is a lot of words thrown at you, but the more you kind of look at price with volume profiles, the more you can kind of start to align certain things. It's not going to be perfect. It's not going to be to a T, but you will see certain things kind of aligning. So hopefully that makes sense. I'm done fucking yapping. But yeah, I normally try to find, again, like this is the 4 hour. So what I'll do sometimes is like, I mean, I just do multiple charts. Um, but yeah, like going from those all-time lows back in 22 to the lows back in 23, you can even go from, this year's lows to this year's highs and draw your volume profiles like that. They're all going to show you relatively the same thing, but it's just how big of a picture do you want to look at. So hopefully you guys like that. I'm done yapping. Hopefully it makes sense. You don't need to get too into it, but it is kind of important to look at, in a sense. Like, I'm gonna try to find some examples real quick before I'm done. So this is kind of a really good, clean example. In these volume profiles, where you can see ES had some really big bounces at 55, 100. This is like an old chart drawn, just to kind of show some examples of what it might look like. Keep going. Kind of some more examples of how your volume profiles can work. Yeah, you can get really into it. Here's an example of your volume area low holding actually and causing a reversal. But again, a lot of this was balancing in the market. You can see how this is actually on gold. Hold on. This is still the gold chart we have. This is actually a really old one before we made that next leg up. But you can see how gold has tightened up really well. This was giving really good opportunities to trade when gold was a little bit more volatile. This is what NQ looked like a while ago. Really clean. Don't have to get too into it. Some more charts. This is gold again. See drop off in volume, different stuff. Yeah, I just say experiment. You can really dive into it. You can kind of learn more. But here's another example of what my volume profiles have looked like in the past. Yeah, this is the 2 hour. This is usually really clean. But this is when volume profiles were really messy. We were kind of chopping on a higher time frame. It's got a good example as well. Like you could see this volume profile ended up acting as support here, as well as we went into this low volume zone, melted down. Yeah, still pretty. This is actually, these are some really good examples. As well as here's some as well. I think that's the same thing. Yeah, this is ES. 5314 to 5298 can be a big spot with higher volume nodes surrounding above and below. I'll be on the lookout for changes. Yeah, still really good. Here's another example as well. That's kind of like a textbook example on SPY. Oh, I remember this. Hold up. I remember this was 518 on SPY. This was like the last fucking dip. Hold up, I gotta find where I typed this out. Okay, here we go. Sorry, this was actually drawn. So I took a couple 518 calls on SPY because this was a really significant low volume zone. Playing out as we're below POC, so I figured we'd go back up. Our higher time frames were still in a bullish trend, And as you can see, let's go back to the chart. Let's actually go on SPY. Maybe I still have this chart pulled up. Yeah. This was the fucking move off 518, where I want to say if I just drew it like this. Yeah, here we go. You guys can kind of see there, we worked our way up. So volume profiles work really good with like expansion. Golly, this fucking chart is so disgusting. It's really hard like when we're chopping in a sense. So like if I want to draw from here to here, it is really, really hard to kind of look at this. Like I don't know if you guys can see, these volume profiles are very different. But you also have to go with time. Here's your what's a node? The node. Another node. Like you can see how this is a volume profile or HVN. It's gonna act as a level here and here. These are some decent low volume zones. Kind of interesting. Hopefully it's making sense. I'm not really good at explaining this. Let's see if I got more examples. Yeah, these are some good examples as well. On NQ. I don't know. I might get more into it. I might make a more detailed video going into actual like auction market theory and fucking all that shit. But I will make a slideshow kind of explaining it, because it is probably easier on paper with some examples. So be on the lookout for that, but I'm done yapping. I'm going to bed.